it.
Tell me about your achievements. We want weights, we want exercise, we want the whole thing.
It's all about weights, isn't it? No, so I
Unfortunately.
think, yeah, so I think like in a good session, like if it's a leg day, I'll push like 22,000 pounds. On like an average like arms day, maybe about like 15 to 20, which is exhausting, but sort of satisfying, especially in this sort of industry. It's it's the only reliable thing where you get an output for an input, which is pain.
Yes.
Well, technically, maybe it's actually not that different. Now thinking about it, but yeah. Hey,
No, I
Satiris,
like
how's
it.
it going?
Hey guys. Oh, good.
Yeah, I'm full crypto bro now.
Feeling rejuvenated.
Hey, you look it as well.
Yeah, I just got
Yeah.
back
Agreed.
from Bali, so it'll have that effect.
Nice.
Wait,
You're
where were you?
glowing.
Uluwatu, Surf Villas is for a
Oh, okay. In Bali. Okay.
crypto AI summit,
Nice.
so it's pretty cool. Met some cool people. Very, very inspired.
Nice, nice.
Nice.
Were you pitching anything, or were you just going there out of curiosity? And tell us, was there anything that kind of caught your attention?
I was just sort of participating. I got invited, and yeah, I thought a lot of the focus was on AI, even though the sort of people setting up the summit from like a crypto VC, they're actually setting up a new fund currently, which is crypto and AI. So I think even the crypto VCs are now trying to look for AI exposure. One thing I did sort of get from that is the importance of sort of privacy. So there was some sort of fairly like OG crypto guys there, a couple of like fairly sort of prominent people in the space who are talking a lot about sort of new narrative shift around privacy and the importance there. And then also what was quite interesting is some work around quantum proofing blockchain and cryptocurrency as well, because I feel there have been a number of recent announcements where it seems like the rate of progress in quantum is rapidly starting to increase, and so you're getting sort of new and like higher qubit chips coming out of Google, especially. There's also some like new sort of scientific experiments that's reducing the number of physical to virtual qubit ratio down to about 2 to 1 now. And so with quantum computing, you have sort of physical qubits, which are the sort of, there's like a number of different ways they can be made. Some are like using light, others using like ion levels and things like that. But they're very susceptible to like noise and interference. And so those physical qubits are quite hard to remain in a stable state. And so you actually need to have more physical qubits being error corrected to actually generate one logical qubit. And a logical qubit is the more stable form, which can be used to sort of drive calculations, sort of akin to what you would be doing with classical computing. And so now that ratio is coming down, the number of sort of qubits being able to run is increasing. And so suddenly, the security of some sort of current day encryption is starting to look not quite as strong. Obviously, I think we're still quite a long way away before it would ever sort of become an issue with Bitcoin. But I think just having the conversation around what are some steps to quantum proofing crypto, quantum proofing even Bitcoin itself. So maybe you sort of have to fork Bitcoin to have a new sort of quantum proof hashing function and quantum proof keys and things like that. Or you have like a quantum proof bridge. And then, there's also some projects building sort of some interesting some interesting things there, which was kind of cool. So that's some of my takeaways. And yeah, just one final thing, like everyone is sort of, AI is top of mind. So I think, as always, if you can try and find ways to sort of stay up to date with AI and be using the latest tools and things like that, because a lot of things are moving very quickly in AI. And also you're seeing sort of single founders now being able to generate sort of quite a lot of progress just as a one-man band using Cursor, vibe coding, all of this stuff. So it's kind of cool to see that rapid rate of progress.
I can't help but wonder if that's a very positive thing or a very, dystopian negative thing. And I think there's probably arguments to be made for both sides, where it's like, if you only have one person that can generate a business, then of course the workforce requirements are a lot lower. But then of course the optimistic side is then everybody can become an entrepreneur and have the creativity to expand their ideas into the real world without needing so much capital and so on. The only caveat I have to that, and maybe I'm speaking for myself, is I don't know if most people are creative enough or entrepreneurial enough to really have an idea that adds value, that is unique enough, and that will get them to like, okay, I need to figure this out and create a team of agents, out of all the AI tools that are out there, so that I can put something out. And I feel like a lot of people are going to be left on the wayside. And again, I might be speaking about myself, and not necessarily the average Joe, or maybe I'm just that. So I feel like maybe it then becomes a concentration of like who's the most capable and creative, and everybody else gets left on the wayside, right?
I think it is a concern. And I think in the short term, at least, we're kind of seeing some examples of where AI is obviously making individuals more efficient. It's like reducing team or allowing smaller teams to kind of have more output and things like that. But that's also just sort of within the confines of current workloads and productivity. And so I do think there is going to be this sort of unlocking of increased productivity in the future, increased growth, new job opportunities. And I know it's kind of trite at this point to say, but like every industrial revolution has kind of opened the door for new jobs, for new industries, for new professions. And I know AI kind of does feel a bit different in the fact that, well, potentially if it was super intelligent and do everything a human does, then maybe that no longer applies. But I think humans will sort of, I think that's going to be quite a long way off to begin with. And also it's not going to happen overnight. And so we are still going to have this sort of transitional period. And then hopefully in a benevolent future, we might be in a place where there's enough abundance, maybe universal high income, where people can survive comfortably without having to work. And those who do want to sort of create and produce more things will have the opportunity to do it. But I imagine a job at that point will be more like a hobby or a vocation sort of expression type thing. But yeah, I'm a little bit concerned about AI, obviously, but I think that the positives will hopefully.
I think what I find really, really quite interesting, and where I think this particular innovation is probably going to sort of make the most damage, is going to be prototyping, because I think especially sometimes, and a lot of people have difficulty properly, explaining as to what it is they're trying to sell. And if you're, really, with a few clicks or with probably a couple of hours worth of prompts, you'd be able to generate a prototype that can at least explain the plain essence of what you're trying to build. Think like any sort of app, right? What a nightmare is it to sort of put that together, right? But if there's a more efficient way of doing that, that's absolutely fantastic. The concern, I think, in general, is as people are trying to sort of take it to the next level and think they don't need professional help with a lot of these things, that's why it gets dangerous. And I think especially around security. And I think Sudhir, so the quintessence of what you said earlier is our 6-digit bank PIN is still going to keep us secure for the foreseeable future of a year and a half, probably. But I think in general, well, obviously being a bit not trying to be smart here, but ultimately, yeah. So this is where the innovation lies in. But the way I think how systems work and interoperate with each other, that's something that's super complex still, for which I still would want like a proper developer slash CTO in order to assess that. But that's awesome to see. And I mean, I think if anything, we'll probably generate more. I mean, ideas come cheap, right? But it's sort of the friction of, right, how do I do this? And that's where I think sort of having a co-pilot, not the brand, but as a co-pilot, I think, or partner, virtual partner, I think an AI can be absolutely fabulous. Obviously, confirmation bias, big time, but that's something that I think you still need a couple of close friends slash critics around you to sort of make that work. But otherwise, fabulous. I mean, let's see. Let's see what that will bring. But it can only be positive. I would agree.
I
there
don't
might
need
be. Oh, sorry.
Go
Oh
ahead.
no, I was just going to say, and then there might even be just we reached the point though where there's companies founded by AI, and so you've got an AI agent as the founder, as the CEO, and so that'll also be an interesting time. I imagine that will come.
I mean, I totally agree with you, and it's one of the arguments that I feel like I'm getting in all the time, where it's like, oh, but people still want, for example, in the context of sales and BD and partnership, of course, what I'm working in, people are always like, oh, but humans want to talk to humans. But I'm like, what do you think happens when it's just AI talking to AI, right? When even if you have like humans that have AIs working for them, it's like you trust them so much that it's like, I don't need to talk to a salesperson to buy a car, because it's my agent buying a car for me on my behalf to a car dealer that is also monitored by an AI. And it's like the human has just totally been, removed from the situation. And every time I say that, I feel like there are some people that are, like biased and voluntarily obtuse and say, no, but you still want the human contact. And I'm like, no, but in what I'm talking about, there's just no human in the interaction whatsoever. And you don't care about it because you trust AI enough that sure, the car is good enough and it's going to drive itself anyway. The hairdresser appointment that it made is probably good enough, or as good as I would have decided. And the grocery shopping is pretty much what I wanted because it knows what I want, and blah, blah, blah. And so all those humans are now taken out of the equation, because you don't need cashiers, you don't need a car dealership, you don't need a receptionist at the hairdresser and any of that, right? So that's it. I wanted to take a step back and
one thing on that as well, just before we take a step back. I do think the sort of agent to agent paradigm is where I do think a lot of sort of decision transactions will be made, and I think that will remove a lot of humans from those kind of roles and from those sort of loops. I think it does provide sort of an interesting sort of problem space where Bitcoin could actually, not to sound too jaded, but provide a solution for once, where it seems like it's sort of solving a problem first, as opposed to coming up with a solution and then trying to retroactively find a problem to apply blockchain to. And so I think we're going to see sort of, obviously, a lot of transactions between agents, and they are going to probably use a digital means of sort of value exchange. And so I think secured digital payments and crypto and securing of information and verification, validation of information are going to be sort of increasingly pressing. And I think blockchain is sort of the perfect technology to kind of solve that. And so it actually sort of made me feel a bit more inspired about crypto as well, because it's sort of easy to get a bit jaded when you're looking at the sort of 20th flavor of a V2 or an L2, sorry. You're like, do we really need another L2 for something? It's like, it's probably not going to make that much difference. But when there's these sort of big step change paradigm shifts, where it's like, oh, this can really provide some value. I think that's quite inspiring, and also attract the right kind of minds and people sort of to the space to build some cool stuff. Like what happened with sort of DeFi Summer, that was like some true innovation. I think what's happening in the stablecoin space as well is pretty interesting. There's a sort of new monetary technology. And so hopefully we kind of continue to see more of these opportunities, and maybe place some bets as to who might be able to capture that as well. But yeah, Justin,
I don't mean
back as well.
No, because I had questions about AI, but I think it maybe makes more sense to stick to the crypto topic. But I don't mean to put you guys on the spot. Do you have any thoughts on what is the really killer app for this cycle? So you had the DeFi Summer, and yeah, maybe we have the stable coin. Is that the thing? And if it is the thing, then aren't we a bit screwed, when it comes to altcoins and everything is being launched in this cycle? Or is there something more? Because I think intersection of crypto and AI, as bullish as, maybe the discussion in the future might look, is just clearly not happening right now. Yield, okay, but it feels like it's, lending stuff to other crypto people that trade crypto to crypto on decentralized. So maybe a bit of a circle jerk that way.
Yeah,
exactly. Yeah. And so it's like, yeah, I don't know. I don't know if I'm becoming a bit jaded, but I'm like, I don't know what is the solution that's really being solved in this cycle where we'll look back and be like, oh, damn, this was the thing. Or maybe this is kind of an intermediary cycle where it's like institutions are coming. And so the ETF and the stable coin and the corporate developments into blockchain was kind of enough to push us to the next iteration, the next evolution stage. And then the next cycle will be something totally different. So I don't know. Thomas, do you have any thoughts on that?
Yeah, I think it's
a very tough question.
I think it's one of those where I believe there's also definitely more than one answer. What I find particularly interesting, and we did touch on agents, talking to other agents, and I think Forward to X is probably one that is going to obviously super recent, and even more so is the sort of privacy aspect, which is also quite related in a way, right? Because if you fund an agent that is then going to interact with some other protocol, then in a way everybody knows what you're trying to shop for, which is generally something that is very, very difficult, right? And you're having, there's obviously also with the privacy concept of thinking Monero, every time there's a big hack, Monero goes up in price because it's being laundered through it, right? Or, well, for lack of a better word, laundered. But yeah, so that's ultimately, so there's sort of nuanced privacy, I'd put it, and that goes obviously quite well with Forward to X, which I think generally people don't want to put everything they're buying on the blockchain. I think that's sort of excessive, and I think also it comes with a couple of problems, especially for companies. If for just to make a point, if at some point all companies move on public blockchains that are perfectly transparent and visible to everyone, how they're gonna engage in a lawyer for potential acquisition, how they're gonna, I mean, obviously there's a lot of sort of ways to circumvent it. There's escrow, but that's also quite cumbersome. And I think whilst it's good to have that transparency, and that's obviously one of the underlying pillars of blockchain in general, you can still have that I suppose, transparency, this aggregated transparency as to what's going on with all the monies that a company stewards, right? But there's a nuance where you're trying to understand, well, do I want everything to be visible? Probably not. But some of it, or the aggregate, should it make sense? Should I be able to mathematically verify as to whether or not a company isn't making up any sales, whether there's actual underlying cash flow supporting valuation, right? Which is which is more relevant now than it probably ever would have been. were very much obviously in not bubble territory. I think that's sort of that would be exaggerated, but we're definitely in an era where it is very, very difficult to fathom as to how much of that AI infrastructure is actually needed, right? So, and I think those are probably the two things to wit. So there's Photo-X, which is still being explored and is very novel. So maybe to explain, it's ultimately a protocol that would enable for agents to react or interact with another website. That's probably the easiest way to put it. And there need to be some, I suppose, guidelines in place, because any sort of prompt from one AI to another, from one agent to another, is obviously costing money. And in order to account for that, you essentially need you need a ledger for that. And I think the easiest way to explain this for Photo-X is a ledger that helps keep people accountable to the cost that their AI is generally producing, right, on other people's sides, making sure that we're not that people aren't being put out of business because you run out of AWS credits, or your AWS credit bill went up like 1,000x because you're being hacked, right? So I think from that perspective, this is true innovation, and I agree, Sotirios. There's no better way there's no digital dollar. There's just stable coins, and it's just crypto and blockchain. So I think from that perspective, and this is something that I'm now really seeing to trickle down into the economy. We've got SoFi that came out. That you can now natively buy. It's the first chartered US bank. You can buy, I think, Bitcoin, Solana, and you'll be number 3, Ethereum, right? Number 2, really. Forgot about that. That's very telling. I think a lot of people have forgotten about Ethereum. Yeah, exactly. So let's put it back on the map. Let's put it back in people's minds. Yeah, So I think that's obviously very, very positive, and it's just going to change everything. It's going to change capital efficiency from a treasury perspective. It's going to change. It's going to change cross-border transaction cost. And I think from that perspective, finance as it stands is way too expensive. And as Jeff Bezos, I think, put it, somebody's margin is somebody else's opportunity. Let's take it, let's build, and let's just kill those margins. That's what crypto's all about. And I'll leave it there.
Got that.
Do you think the fact that the fees on Bitcoin and Ethereum are still probably too high for most, like abundant transaction? Do you think that's an issue, and therefore we have to look at the next best thing?
No, so I think there's a couple of nuances, right? Especially to layer 2. So if I'm looking at gas, it currently stands at 0.18, which for those that just joined us this cycle is so cheap. We're talking 30-40 cents for a transaction. I don't know how much you guys have paid, but I paid hundreds of dollars for one. So minting
2,000 for a transaction back in the NFT mania. It was insane.
Yeah, exactly. And I think so from that perspective, that's obviously one thing. And then the other nuance is ultimately the user experience, in terms of, we touched on it as well. Is a transaction quantum secure, right? Is there any other means I can tap into? What we're talking about, that sort of privacy pillar again. Do I have sort of means to effectively obfuscate a transaction to some extent, at least, whilst I can still mathematically verify that I've got integrity in any given blockchain, right? Which is, you put $1 in, you get $1 out, right? There's obviously a lot happening on that blockchain as well. So it's not perfect accounting, but it should be perfect-ish, right? Or it should be perfect, obviously, but there's fees, there's checks and balances in between. So that's going to stop it from it being one-to-one. But there's also other ways for protocols to essentially tap into revenue. So does that have to be fees necessarily for transactions? Maybe. Or it could just be utilization, which will be a better sort of means of accommodating for. But yeah, so I think we still have a long way to go to make things a lot easier. Is the infrastructure in itself going to be expensive to set up and to transact on? Probably, but is it going to be as expensive as the clunky infrastructure that we call banks?
Yeah.
Probably not. And so that's the nuance that I think we need to look at. But like any innovation, it's going to take some time. And obviously, the big problem is if you send, money to the wrong address, it's gone. And
Not
that's certainly
necessarily,
something.
but well, for current
Well,
technology, but like reversible transactions is sort of a potential solution there. But one thing I would say about the infrastructure build out that I do think is quite important to our bags or the bags we may hold again. One thing I do think from the infrastructure and say like the blockchain choice for these companies, like I think it's going to be a harder and harder sell for these huge institutions to like adopt an existing blockchain that's already very fragmented versus like implementing their own, for example. So you're kind of seeing like Google build their own blockchain, for example, and Stripe, and instead of sort of using an existing payment rail because they also want to have some of that value capture. So I think there is going to be this sort of jostling still on the infrastructure side. I can see though sort of Ethereum's place somewhat more secure in the fact that it has got such sort of widespread global adoption already. It seems like for a lot of the sort of like bulk of the stable coin, things like that, that is tending more towards being settled on Ethereum, even if it's like via an L2. I think L2s and L3s addressing Justin's point will sort of help solve for the gas fees and the cost of microtransactions. And so you can kind of like further abstract away as you go further up the sort of layers to reduce the cost. And then obviously there's some payoff with security, but then if a transaction only costs like a nanocent, you might only need to fund an agent with like $1 for all its lifetime transactions. So even if that gets hacked and it's not super secure, your vulnerability is like $1. So there's going to be this sort of playoff between like cost and security. And then I think touching on a couple of points from Thomas as well, I'm kind of starting to see blockchain a little bit like as in a sense of like what's Bitcoin missing. And so Bitcoin has like a very unique value proposition, and then it feels like there's the rest of crypto. And so it's like, what does Bitcoin not have? Sorry. And so I think one is it doesn't have programmability or good programmability.
Really.
And so that's where kind of Ethereum comes into play. It doesn't really have sort of transaction scalability, which is where things like Solana and Ethereum L2s and L3s come into play. It also doesn't have privacy. So I think that's where things like Zcash start to come into play. And then the other pillar is sort of, it's not quantum proof. And so I feel as sort of like 4 very high level categories, I feel that's maybe where to kind of think about in terms of like blockchain applications as well, moving forward. And so for me, talking about your original question, Justin, what do you think either some of the killer apps have been or will be? I think sort of the proliferation of sort of decentralized exchanges, so DEXs, they've really sort of taken a foothold this cycle a lot more than previous cycles. So you had things like GMX, but it wasn't really getting the adoption. I know I sound like insufferable in talking about Hyperliquid at this point, but I feel they've done a really nice job of sort of validating the sort of product market fit with their platform, and obviously that spawned a lot of competition. And then you got things like Asta with dark pools. So then you start bringing in the privacy aspect where the sort of order books and things like that are sort of obfuscated. And so you can't be sort of hunted as you might be on things like Hyperliquid. So I think more work to be done there. And then I think moving forward, we've not really seen it so much as like a killer app, but I think an area that will probably continue to get more focus and attention is going to be privacy. Maybe this cycle or maybe into next cycle, like no idea where in the cycle we are at this point. But I think sort of privacy is going to become increasingly important, especially as a collective, we've kind of sold out a lot of the core tenets of crypto and Bitcoin to begin with, where like, I'm sure most of the OG crypto cypherpunks are probably like turning in their grave to think that we've got a Bitcoin ETF, for example. It's just become co-opted by the system it was trying to replace ultimately. And so I think a lot of the older guys are probably starting to realize maybe that sort of infiltration from the traditional system, and maybe privacy is a solution to that.
And the only thing I would say though with the Bitcoin ETF is I don't see them as much as the antithesis of crypto as other stuff that's going on in crypto, because for me it's like it's more traditional finance and another type of capital wanting exposure to the price action and the development of Bitcoin. But I don't think it makes it less, like more or less private or more or less, cyberpunk, because the activity of people who want to operate on the blockchain are still very much free to do so, right? I think the thing that bothers me more is about all the KYC and compliance rules that goes on with the infrastructure, the exchanges, the custodians, the players, the OTC, and so on. And of course, there's a lot of good arguments as to why that should still be the case, because you can always point a finger to someone who did something very bad and took advantage of the pseudo anonymity of a blockchain to launder money, fund something bad, acquire something that they shouldn't be acquiring, and blah, blah, blah. But the point is, I think that's the thing that disappoints me so much with how the space has evolved, is we've totally given up on, the ideas you're talking about, because we want to play nice with the regulators and so on, which is probably a necessary step anyway. But so, yeah, 100% agree with you. The only thing is I don't know how to get over that, basically. And I think you guys know my anarcho-capitalist, ideas, and how I think, privacy should be the default. And I think it's been the default, not just for CryptoPunks at the beginning of the movement, but also for society before you had any kind of digital transactions, right? Which is, if you were a guy in the 18th century and you had a chest with gold coins that you had hidden somewhere, that was the ultimate privacy, right? Like nobody knew how much you had, where it was, how you were spending it, and so on. And then we've just kind of accepted, after, let's say, banks and fiat currencies, and definitely with digital solutions, to be like, oh, all this needs to be tracked, therefore privacy is a lie, therefore, we don't really need it. And I think maybe there's a way forward for it to exist again, but then that means almost like lobbying regulators to let us do it, or take the risk of like, we're going to push the space forward, push the boundaries, but also risk that the regulators are going to come after us for XYZ reason, because you used a coin that doesn't allow tracking of blah, 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 or you want to do a traditional transaction and you can't prove the source of funds, even though they're super legit and you're a super honest person, and so on. So that's the thing that frustrates me, I guess.
I think sorry, just one tiny thing then, Thomas, with your sort of view on anarcho-capitalism, I think crypto is the sort of fertile ground for potentially truly free markets. And so I think the market will ultimately decide which way it wants to go and how much it values sort of privacy over, say, number go up. And so I think if sort of like all of this KYC privacy concerns are becoming insurmountable, people will sort of jump ship. And the nice thing with crypto and blockchain is like relatively like low switching costs. And so if you want to start sort of scaling out of one thing and buying more of the other that's more secure, and that's kind of a lot more doable. I think the market will kind of self-correct for that.
You know, something that has changed, like from a mindset perspective for me this cycle, is I think for the previous 2 cycles, I was always thinking of, like, I was always asking myself the question, if and when I do sell crypto, how will I go back into traditional rails and how will I justify it? And that was like a big question. I think you, like all 3 of us, you know, we had that discussion of like, is it through an OTC broker? Is it like a credit card? Is it a life insurance? Is it a trust? What are the pros, the cons, the risk, and so on? And I feel like as time has passed, and maybe it's just because I've been holding crypto long enough that now I've kind of surrendered to it, but I'm not necessarily asking myself the question, like I envision a path, like maybe a parallel reality where it's like, you know what, you're holding stable coins, like you're getting paid in stable coin. So all the money, you know, you can conceptually prove it and explain it, but it's just going to stay in stable coins, stay in some kind of wallet, you know, that you've created, like an OKX wallet that is plugged into some kind of account with some kind of credit card. And I'll just be spending in that way, which is, I guess, part of the answer. But my point is, I feel like I'm asking myself the question about how to off-ramp crypto a lot less than before, even though if you had asked past Justin, I would have assumed that I would ask myself the question a lot more now versus when I was just getting started. And so I think it's super interesting and probably just a function of a lot more products, features, capabilities being available for crypto guys. So that's it. End of rant.
Yeah, no, I think that's a valid, used to be a really, really valid concern. I think a couple of things as well. So I suppose one of the things that people don't really realize is that as you're moving to a different blockchain, is you're also in need of sort of a different means of liquidity, right? And I think that sort of segregation of liquidity is going to be a bit of a concern around different blockchains, because that segregation, what it does is it makes it much harder for the sort of parties that will do the lifting for you, unless you're sort of bridging it yourself, which I assume few people do these days. And obviously most people will never do that just because it's way too complex and there's a lot of, you know, risks generally involved, and how is a retail person or you know, Joe or Jane Doe, how are they gonna understand if they're doing the right thing, or if they maybe, and that's the other, I guess, the dark side of AI, if they would have come across a bridge website that looks identical, because the cost of doing that is near zero. And so I think from that perspective, that's obviously a bit of a concern. There's, you know, players like you know, Circle or Tether that will do that in the background, but that also comes obviously with significant cost for them, right? So for them to essentially, you know, change USDC on Solana, Ethereum, or any sort of layer 2, that's it's fine until it sort of becomes a crowded trade, and then eventually they'll have to obviously readjust their liquidity. And I believe that is something that at some point we'll have to accommodate it for, because one thing that the US dollar does is it unifies liquidity, right? And so when you're looking at via oil barrels, well, essentially priced in the dollar. I mean, there's a lot of sort of political reasons for that, but ultimately what it does as well, it helps to unify that liquidity, and it helps to keep markets liquid at all times, right? Because if you're trying to buy, I don't know, like 100 million barrels of oil in euros, then you also need somebody to sort of facilitate that liquidity, and that's also going to cost essentially money. And so from that perspective, that's going to be an interesting one. So I'm not entirely sure as to how that's going to pan out, or whether that's just going to be, I don't know, like Ethereum. The one thing that I'm certain about is that it has to be an account-based blockchain. There's no doubt in my mind. And again, I think this is not shitting on Bitcoin or Clock, but it's really, really difficult to operate with Bitcoin, and it's not fast at all. And unfortunately, I mean, it could obviously be there. There's not a bug necessarily, but more of a feature. It's hard to reach consensus on Bitcoin, right? So if you want to get Bitcoin quantum proof, there's some means that are already sort of built into that, right? But certainly but certainly for the network to agree on a given approach, where obviously some protocols that will sort of build on top of one feature will benefit and others will not. That's highly politicized, right, at this point. And I think that might even be that inhibitor again is a feature and a bug at the same time, but that's making it really, really quite difficult. But yeah, I think it's one where, like always, the market is going to move its way into the not necessarily most efficient, but most sort of pragmatic way, and we'll see what happens. But yeah, so that's one thing that I see to be difficult, and that's where I think DEXs or decentralized protocols have a significant disadvantage, and that's liquidity, unified liquidity, and getting funds across.
Thomas, can you explain me? Like, I understand the difference between UTXO models versus account models, but it's like, why do you think one is, works and the other doesn't? Is it about the amount of time it takes to reach consensus, or is it about the transactions themselves? Like, explain that to me.
Right. So I think maybe a quick refresher. So if somebody holds 1 Bitcoin and sends, let's make it 100, that'll be easier, and sends 70 Bitcoin, then we're not looking at a balance to begin with, but we're just looking at a UTXO, which is essentially the remainder of Bitcoin that will stay with a person, right? In this case, that would be 30 Bitcoin. Now, what that does from an accounting perspective, it's quite beautiful because it makes it really, really easy to understand as to what the balances of Bitcoin were over a period of time, right? So we're logging that. Now, as we're doing that, though, there's a couple of things that happen on the Bitcoin blockchain, which is you obviously need to send the 70 Bitcoin to another party, and then you're also having to send the 30 Bitcoin from your previous UTXO to your new UTXO. So there's a couple of transactions that occur, and that creates complexity for organizations for if you're trying to sort of reconcile your transactions, and that ultimately I feel is going to be a bit clunky, and we've been used to an account-based structure, and that's sort of imprinted onto us. And I think it is probably the most, even if we're thinking of finance background, if we're thinking of accounting, right, it's probably one where the way for us to understand the movement is not necessarily what's my balance at a given time, but it's about, what was my starting balance, what was my end balance, and what happened in between. And I think that sort of that breaks it down much easier for us, and it's easier for us to account for to begin with existing rules and accounting, but also mentally account for it. So I think from that perspective, this is certainly going to be the model that will sustain.
Understood. Yeah, that makes a lot of sense.
Look at some chart.
I was literally but exactly that. Yeah, exactly. I was like, I think this is typically the time of the call where we start going into territory and start talking about stuff that's happening. I don't know if it's my job kind of imprinting on me, but I've been looking at a lot of stuff that is coming out basically, and I'm sure Sotiris, you're keeping a finger on the pulse of the market, with regards to new stuff that might be coming. Is there anything that you think is exciting, either in like currently trading tokens or stuff that's coming out like Monad or Mega ETH or Lighter or something like that, or maybe recent launches and how they've performed?
Lighter, I think, will probably do well, and I'm incredibly upset with myself for not farming it basically the first week, where a very close friend of mine was like, oh, just wash trade like 1 million in volume and you'll get 100,000 points, which would have been a nice million USD. The last. Yeah.
So I'm handling some transactions of like people wanting to offload points, and right now the spread is essentially $80 to $100 per point. So I think whatever the people are holding, the people that were early on or were using I think there are pools, right, where you could just have been an LP and not necessarily trade, even though I think you get less points. But I think there's some like very average people, like could be you and me, that made or will make a ton of money.
I'm pleased for my very young, close friend. I think he's like early 20s, and I think he's pretty much set for life now.
Yeah.
From just purely farming lighter. So good on him.
Yeah. There's I also think they have big plans, by the way. Like I've been talking to a few people that I can't get into specifics, but I think they have like big plans, in order to be relevant and not be seen as just a copy of Hyperliquid. And I think the fact that they're EVM based is going to be meaningful, basically. So yeah, I'll be very curious about this one. I think I'll buy a TGE, basically.
Yeah. Oh wow. Okay. I think there's going to be a lot of sell pressure from the points. At least if what the current
I'm not saying I'm buying
but
I don't think I'll be buying at the first minute of TGE, but I'll be I'll be to scoop up some tokens. And I think the team they're very smart. They're clearly, they're doing more volume or as much volume as Hyperliquid, depending on the day. And so I think
this is like zero fee though, so it's very easy to watch. Like the open interest though is probably the better metric to kind of look at, which is still lower. But I think it's still probably going to do very well though. Sorry.
They just raised some additional capital from Founders Fund and Ribbit Capital. So you've got Peter Thiel who's in the house now. So it's going to be an interesting one, I think. Anyway,
nice. Yeah.
Tell us about Plasma, Sotiris.
Well, no, I just talking about other ones. I think Plasma is looking pretty juicy right now. Again, sort of astrology for men, TA, but you're seeing a bit of sort of nice like bullish divergence, sort of slowly starting to form. The RSI kind of picking up. And improving a lot quicker than the sort of relative bases. So I think this one might just be one to kind of keep an eye on. And it's been so hated and sort of now forgotten about on the timeline. I think that's kind of often a good time to be sort of buying, especially given how much sort of attention it had. I have also literally just got filled on Astra as well, about 1.1. So I'm back in on that. I think, again, this is just looking quite sort of primed and juicy, especially, again, TA take with a pinch of salt, but there's like a fairly nice level here that it's been kind of repeatedly pushing up against. So maybe this will continue to run. But one thing I am very jaded with is just how paper-handed the market is. So like I bought some Starknet the other day as part of the sort of privacy meta and got like a nice sort of 30% pump, and then it just sort of instantly retraced. Also, Justin's got his rappel going on.
He is me. I am him.
Seriously. So that was kind of interesting. So I put like a stop loss, sort of, I don't know, 10% in profit still. So I walked away with something, but it just feels like it's a shame to not be able to hold a coin for more than 12 hours before it gets dumped. But
I just wanted to interject, and you're showing this chart and also the Plasma one. It is giving me echoes of when you were talking about Fartcoin 6 months ago, and you were saying, you were looking at the chart, and you said those exact same words, like astrology for men, but the chart is looking, juicy and so on. And was it 6 months ago? Exactly, like March. And you were like, oh, I think it's a good place to buy. And I was kind of like, I do think the chart looks really good, but it's freaking Fartcoin. Like I cannot, like I philosophically cannot. And then I spent the next 3 months, watching it go up. So now when you're talking about Plasma and Aster, I'm just like, I have to resist. Sotiris is telling me the chart looks good, and I think it does look good, right? So
And Far Cry's
Um,
actually not looking too bad itself either, actually. This is quite a nice sort of
but
long-term trend that seems to be rounding out.
But I think for meme coin, it's like if for a long time there's no news, it's really hard to kind of kick
Yeah.
things unless you're Dogecoin or maybe Pepe or something like that. But other one for the plasma and the Aster, yeah, I get it. I mean, there's like
And they got
especially
strong
Aster,
narratives.
yeah, exactly. There, I think especially for Aster, I'm like maybe that's the way I'm rationalizing it, but I'm like, yeah, you can say CZ's out of the picture. It's not Binance, blah blah blah. But it's like, I mean, those teams, those whales, those product guys, they know, and they have plans, right? They're not going to let
Yeah.
it go to zero. I would say,
And
not financial.
and CZ bought like 2 million tokens and announced it at sort of roughly $1. So I think him putting his sort of like public support and announcement behind his token is what sort of made me pay attention to it again. And I believe he hasn't actually like publicly disclosed holding any other tokens apart from Bitcoin and BNB. And so him now holding Aster seems like a big deal. And I think Hyperliquid is the most direct competitor to Binance, of which he is still probably a huge equity holder of. And so I think, as with FTX, he probably will not be happy to see someone else potentially gain market share. So I think he's probably going to continue to push Aster. I think that the exchange is a bit shit though. Execution pretty bad. A lot of prices don't update that frequently and things like that. So I would have liked to see the team shipping more quickly. Whereas like, I know I sound sort of like a delusional cultist, but I feel Hyperliquid, as far as like execution, haven't really put a step wrong so far. And they've got like a fantastic product. It's stress tested. It's done hundreds of like billions in volume, and it's kind of held up through some pretty rough conditions. I know everyone's saying about the auto deleveraging on 1010, but I think that was sort of a well-documented thing, especially after the sort of jelly attack, which is why they kind of implemented the auto deleveraging feature to begin with. And just a couple more coins. Oh, sorry.
Yeah. No, but I'm sorry. I don't mean to interrupt you, but I just want to kind of add, flavor and color to the discussion. Uniswap, I think, pumped as well, right? Because they updated the fee thing, and I'm thinking about the whole tech space.
Yeah. So I think they've made a proposal. So I'm not sure if I don't think it's been approved yet, but if it gets approved, then that'd be huge. So Uniswap is up. I'm not even sure if I've got on this list actually, but that's one I think is a no-brainer. And on that note as well, I think, well, either Uni is highly overvalued or highly undervalued, because the amount of, so I think Pump's still doing like roughly $1 million USD daily buybacks. And so I think Pump is looking juicy as well. Especially if the Uniswap thing sort of plays out. So yeah, I think with these ones, I feel you need to zoom out a bit further on the weekly, but because this is, I think it was either here or here, there was sort of the announcement of the announcement about fees, and then everyone like got super excited and were like, oh my god, like maybe they're going to use fees to buy back the token, and then kind of everyone forgot about it. And now he's just sort of publicly put forward the proposal, and so it'll be kind of interesting to see how this plays out. And again, this feels kind of like a Link scenario where it's had this massive range of consolidation, and there's like, why did you not buy it at $8? Like, obviously it's at like 50.
I blame you, Sotiris.
Yeah.
This is the perfect reel to post in like 6 months.
Yeah, is either going to be $60 or 60 cents? Like one of the two. Yeah. So that's kind of what I'm excited by.
Super interested in. Yeah, I want to talk about Tao. I was just going to say on this, almost like the betting on the proposal. I'm really curious about Polymarket these days. And again, it's maybe my job, kind of influencing me. But I see so much appetite for Polymarket right now. And so you've got an equity component and you've got a SAP component. And I'd be super curious about how that's going to translate in like how they're going to launch and how they're going to do. But they're buzzing right now. That's it.
Yeah, and they did like a rapid follow-on round as well. It was kind of crazy to see. The only thing slightly on against Polymarket is sort of Robinhood trying to become an everything app, and so they're also sort of enabling prediction markets. And I think as far as their sort of like market reach and penetration, and also just like user depth, I think they have. They have a potential to be a bit disruptive. Also, Polymarket's against.
How do you trade on? Sorry to always interrupt. I just want to the back and forth. But how do you trade on Robinhood if you're not American? I think that's my big question, because I've heard someone said exactly the same argument, and
so it's like think it's in a lot of countries now, but not Hong Kong.
Europe for sure. Across Europe. Yeah.
I still think maybe I'm being biased. I mean, of course, in my position, I don't have a view for or against it, but I just think there's still brand value, which is not enough probably, to be able to promote. But I think it's kind of like, even when I get, let's say, quoted by a reporter, when they ask me the question, they're like, oh, and I saw that the odds of this thing happening is at X percent, X percent on Polymarket. So now it's almost like become like a reference of like, hey, but on Polymarket it says that much, right? And so it becomes like a thing, almost like, hey, do you want to Google this? As in like, let's search what it means. And it's kind of like, oh, but there's the odds of something happening. Is it on Polymarket? What are the odds? And I'm like, yeah, you hear about Kalshi, you hear about other people enabling prediction market. You could have it maybe on, the Hyperliquid and the Lighter and so on. But I'm like, it's pretty set in for now. So yeah.
No, I would agree.
And I think in general, prediction markets are actually probably one of the most overlooked piece of innovation. And I think Polymarket, obviously, they've done the bulk of the work, and it's just so. I mean, it's ultimately an oracle, right? So it's probably one of the fastest sort of data processors for emotion that is out there at the moment, and that's certainly going to be. And I think even Interactive Brokers had a feature like a while back. But they still obviously have it, they're pushing for it. But ultimately, yes, you need a lot of user depth, right? And once you have that, so you need frequency, you need user depth. And at that point, I think it becomes more telling, and you need a degree of diversity in your user base as well. I think the reason why Kalshi is now, so they handled the legal stuff very well, but also Polymarket was always offshore, right? So it's almost like, what do offshore investors think about this particular issue? Pardon?
And Polymarket was stating they wouldn't serve US customers.
Exactly.
So,
yeah.
One thing on. Oh yeah.
Yeah. No, go ahead.
Oh, just one more thing on the Polymarket. So I do think the whole sort of. I completely agree with Thomas. I think the sort of like prediction market is still hugely underserved, and it's got like a massive amount of potential. You just look at the sort of like prediction market outside of sort of like Polymarket and on-chain stuff, like is a very, very deeply well established market and industry in almost every country. So people love betting on sports, they love betting on horses and dog and all of this, and like it's a huge market. Also, I think it has the similar sort of tailwinds of kind of financial nihilism that is going to sort of fuel more rampant gambling to try and escape sort of being destitute. And so I think that's going to definitely benefit from it. Also, it kind of can potentially add it has some like interesting, essentially like options, for example, where you can kind of bet on the probability of it hitting a certain price by a certain date. And right now, there's actually probably like quite a lot of spread to be had. And so I think it's not super efficient at the moment, and so I'm seeing quite a few people make some fairly good returns just on sort of nibbling away at that inefficiency. And even one guy who is just betting like $1 million across like 10 positions that are at like 98, 99% certainty. And so you're risking a lot, but you've got an almost assured bet. And obviously a true 99 odd, like 1 in 100 will kind of go against you. So you need to sort of weigh up the risk return, but it is kind of an interesting area for like new sort of financial instruments and mechanisms. And one final thing, I think there is going to be an opportunity for whoever creates a sort of like trading terminal for like on-chain prediction markets, because the actual way you currently buy stuff is very clunky. You're essentially saying sort of limit orders. There's not much depth. There's not much liquidity. Even just trying to bet like 20 grand on something like a little bit non-mainstream, and there's just no depth, no liquidity there. And so I think there's probably going to be a hyperliquid-esque moment for prediction
almost
markets.
Like a market maker. So that almost shouts for a market maker for prediction models. There's your $1 million idea. And then if you obviously have that capital and you're only off like 1 in 100 for niche bets, I think that's still like, is Thomas gonna get his haircut this weekend? I don't know. I don't even know at this point, right? But and getting sort of depth for that might be difficult, but ultimately, if you have these small events and if you're nimble enough, that could be an interesting one for sure.
That also begs the question about, sorry, just one thing is like insider trading, because they've even got prediction markets on like who's Kobe gonna have as guests for Up Only, for the resumption of Up Only, and it's like, well, obviously, is it illegal for him just to put massive bets on and then bring the lowest odd guest, like the lowest percentage guest on?
That's what I wanted to talk about, which is there's a hilarious video of, I think it's Brian Armstrong, talking at the earnings call for Coinbase. And so he goes for the whole call, like, 1 hour answering questions, talking about the reports. And then at the very last 30 seconds of the call, he's like, oh, and because I'm looking at the Polymarket screen, I feel compelled to say Bitcoin, Ethereum, like all the words, that are this. And so kind of like, I don't know if he killed or made a lot of people, very rich, or probably both, by doing that. But so he was looking at it and be like, screw you guys, and just kind of went to that. And so, yeah, there's definitely an opportunity or a risk for people to see what the prediction markets are, take a bet, and then know exactly what the outcome is going to be on that front. So, yeah, 100% can happen.
Hopefully there'll be prediction markets on what we say on one of these podcasts soon.
And 100 next week, guaranteed. There's another thing, by the way, Tom. On your point about market maker, I hate myself for not reading more into this ahead of this call. But there's actually a market maker that did a post on precisely what you're talking about, which is they have their strategy or their perspective on prediction markets, which is if you use a Black-Scholes model, to kind of, I guess, calculate, the odds of ending, in the money based on current pricing, you can put yourself on both the bid and ask, and then kind of trade the spread, if you will, on those markets. I don't understand it well enough to explain it. Otherwise, I could explain it simply. But so there's definitely people that are looking at it and that have strategies to either price it or just take advantage of the pricing by being quasi-hedged, or giving two-way pricing for a certain period of time. So yeah, that's.
Mm-hmm. Oh, it's really that's really interesting. Yeah, and again, this is another piece of innovation that I think blockchain is primed to sort of take advantage of, right? Nice. One thing that I really want to do as well when we look at Bitcoin dominance, obviously, Satiris, you've got a long list, and I'd love to, for selfish reasons, like just see what else is on the list. But I think that's because I think we sort of, what are our thoughts on Bitcoin dominance? I mean, obviously, before that, we might want to look at Bitcoin, but I think this is actually more interesting to talk about.
Yeah, I'm happy to dive into to Bitcoin dominance. Bitcoin, I think ultimately Bitcoin is still gonna sort of be the primary director of the way things go. So if Bitcoin completely rolls over, then it feels like everything else is just going to get eviscerated. I personally have been a buyer again at 102. So probably means a good time to sell. So we'll see. I'll see how well that plays out. But yeah, I don't know. For me, there was a point towards the end of last week. I think it was on the Thursday. It was the first time in as long as I can remember a sort of positive dislocation for crypto against US equities. And so US equities opened risk off. They were sort of down. I think Nasdaq was down like 1.5%. The sort of big tech names were sort of had some fairly substantial pullbacks in sort of equity terms. So we're talking a few percent, but for equities that can be a lot in a day, especially at open. And Bitcoin is actually up. And I was like, oh, that feels shocking, because for the last what's felt like eternity, but pretty much 3 years, stock market rallies, Bitcoin kind of plods along and goes up if it wants to, and maybe it's sort of 3 months delayed. As soon as any hint of like equities even sneezing, like Bitcoin just freaking crashes right away. Alts go down 10x harder. Even crypto, I feel, has just been the sort of release valve for a lot of the price action we see in the equities market, actually, because I feel every time there's been some sort of new FUD, sort of because of something Trump has said or an announcement, they've always dropped the announcement sort of a Friday night when the markets close. And so not only does it give sort of people a couple of days to sort of not be as reactive and have cool heads prevail, it means the 24/7 crypto markets, though, can be the first place where anyone who's a little bit panicky can just like insta dump. And so seeing that sort of positive dislocation for Bitcoin against equities was like the first time I was like, this is some interesting relative strength we're seeing. So that's kind of why I decided to get back in, at least.
Or actually weakness. So Tibbs, if you don't mind actually adding XLK, which is a tech ETF. So if you, we might even want to see in relative terms. So as in, if you add it next to Bitcoin, the plus next to BTC USD at the top, and then just XLK, and then we just need to zoom out. XLK, that's the one. Yep, and then you can sort of see. I think you might want to zoom out a little bit more, but there's definitely a degree of that may be a little too much. I think you want to start at July. What's that? 21. Yeah, that's a little bit more. So zoom in a little more. So we start in July 21. Yeah, there you go. So actually at the moment it looks almost like XLK is slightly ahead of Bitcoin. But that's obviously in part because the valuations went up. But ultimately, this looks a little bit different. But yeah, I think in general we probably have a bit of catching up to do, especially over the course of the last week or two. So that's sort of what you can obviously see that Bitcoin going down, right? But you can see this index still going up, supported by earnings as well, by really, really strong earnings. And let's dive into the boring stuff as well, supported by generally easing right into really, really strong earnings, which is somewhat unprecedented. Where we're still looking at, we probably won't be getting any more CPI data this week, but generally that looks to be coming out a lot softer, more boring stuff. Essentially, the rent equivalent, which is what the Federal Reserve is using to sort of establish as to what rents are priced at, which is, me asking you guys, okay, right, how much would you charge in rental terms for your house, right? And if that goes up, that generally means that component would go up. But it looks as though that will be coming out softer based on more regional data points. And yeah, so I think from that perspective, we're still in a good spot. And yeah, so I would think that it's your 102 trade. I think Sotiris is probably going to be, over the course of the next couple of weeks should be a good one.
Fingers crossed. All I've been doing is losing money the past few months.
Not advice though. Yeah, this is obviously not financial advice. Let me just put that out there. None of this is, but again, we'll put the reels out, guys. And then at that point, you'll be cursing yourself for not listening to Sotiris.
Yeah, I feel my calls are generally pretty good, but my execution is just emotional garbage. At least the last couple of months. So hopefully I can improve on that. Have you on that note though? I saw an interesting, I think, Raoul Pal chart on the what was it? It was the industrial sector versus like manufacturing sector index versus, I think it's like a proprietary indicator they've made versus Bitcoin. And again, I feel they do like to sort of overfit charts, but there was some like quite striking similarities between that and Bitcoin, and kind of helping sort of guide why maybe Bitcoin performance has been a bit slow, and kind of indicating that we're sort of overdue an expansion. So yeah, we'll see. Like, what are you guys kind of feeling, looking at, buying, selling?
Thomas, go ahead.
Right, so I think, and I hear this a lot these days. So I feel at the moment people are waiting for the market to do something directionally, and they're almost quite bored. I think, to be honest, the movements that we're seeing, anything from like 100 to what did we have yesterday, the day before 108, I think a lot of that people don't realize is also based on just mechanics and based on delta movements, based on hedging. So I think that's actually nothing completely out of the ordinary. But I think once we break out of either below 100 or above sort of 110, I think that's when markets will get more certainty one way or another. There's a lot of chatter that 100K is the line in the sand, and psychologically probably is. But I think ultimately we've seen, and this is probably also as to why equities have stalled a little bit. There's the government shutdown, which may or may not end this week, right? Hopefully it will, but at that point, at least there'll be more data. Then I think that the other thing that sort of changed is the probability of a rate cut in January, which is, I think the mode is now, which is the most common value, is well over 50%, is sort of the rate projected for December, which is going to be one more cut. And I think by the way it looks like the next cut after December is priced at in June, right? And that's probably too slow for my taste. I think it will probably come down a bit more, because I think that the CPI is going to be coming out softer, especially after the government shutdown as well. And I think, again, the rental factor is probably going to trickle down as well. So we'll see that. Again, earnings are super strong. Yes, there's chats on government bailouts on OpenAI, which is wild. I think that's unprecedented, which is and it's at $1 trillion. So that was a really interesting ask. And I won't get into sort of a lot of other questions on that, but that's obviously really weird.
But it's been denied by the White House, though, right? So they will
of
they will
course.
step in, right? But yeah, I mean, the fact that it's even being asked or considered is just already insane, I guess. Yeah.
Yeah, I think they're trying
I guess.
like misspoke and didn't use the correct term for it, but yeah, everyone's trying to like pedal it back basically. But I think still sort of warning signs to be had.
But the thing is, I think you could make a case about just AI in general, not necessarily OpenAI, because there's so many like American players that are involved in AI that I don't think OpenAI is irreplaceable. That being said, I would understand that the government would have like a very big vested interest in the success of American AI, you know? And that doesn't mean OpenAI, that just means AI in general, but it is like such an important technology, and it is such an important piece of like a geopolitical, military, economic, whatever you want to call it, like it affects everything. So does the government have something to say about it? Probably. How does that work? I don't know. But I know that David Sachs on the All In podcast was saying, like, I mean, that they would never even consider doing any kind of bailout in the way that people think of it, like with the banks in, you know, in 2008 and such.
Yeah, feels very one-sided as well. That
Also,
sort of ask.
Last week it just feels sort of jittery as well. I feel people were just looking for sort of like any reason to like risk off, and you kind of saw this like pretty big pullback. It's like 5-6%, with no real changes to anything. I guess everyone just collectively was like, this is feeling a bit frothy. But
can I play the devil's advocate on this or steelman this? But I'm like, of course, you know, the index, the ETF we're looking at right now, could it drop another 5%? Totally. Could it drop another 10%? Absolutely. Can it do another, you know, even after that? Sure. But I do think there's a point which is not too far off where most investors would think, I don't want to be a seller of this, basically. There is a point where it's like, when you're betting on, you know, the most impactful technology probably in our generation, and you see how much capital those companies have and how important it is to the countries and how much, you know, earnings the companies actually have, whether that's profit or revenue, whatever it is, there's a point where it's like, I don't want to be shorting this. I don't know how much upside there is, but I don't want to be selling this. And I think that's probably the situation you'd be in for the S&P or the NASDAQ.
For sure. And I feel as well, like if you look at sort of pullbacks from 08, the sort of bottom, like 08, 09, like 09 bottom, there hadn't really been any sort of massively meaningful pullbacks until sort of COVID. And so I feel that has already released so much sort of so much pressure from the market as like, and again, this kind of type of release valve where you sort of obviously much bigger magnitude in 08, but this was like a pretty significant sort of reset. And so I feel for the market to have then like, after not really having topped for what, like 12 years, basically, to then retop, what, 3 years later in any meaningful way, it just doesn't. And again, like you're saying, 10-20% corrections and whatever, but like for this to now be the sort of generational top, it just feels unlikely.
Don't say it, Sotiris. Don't jinx it.
This
No,
time's different.
This generational top. No.
Devil's advocate. It was the longest expansion, one of the longest expansions for sure, right? So that's, you know, to DOA. And if you look at, I don't know, if you were to look at, I think Bank of America was like BOA. Essentially, I think they only recovered from the 2020 from the 2008 losses. Something like 2019, I think, for the first time, but then so yeah, I think which is why I think index is absolutely rock, because it just takes out the trash and it brings in, what VCs sort of incubate, and is quite innovative. So that's, I think, pretty interesting. One terrible call of mine. I just want to highlight. Oh, there we go. Yeah, no, it was actually last week.
Yeah. Well, one thing on that though is these are not inflation adjusted as well. So if you kind of put this over M2, it's still going to be way lower. Because
for sure,
$53 is not worth what $53 is worth, sort of, in 06.
Yes.
And so
I think, sorry to jump in, but on that very point, I think there's you can see the S&P 500 denominated in gold or something like that, and essentially it's like flat for 15 years or something like that. So there's definitely an argument to be made there. I mean, not to say that, of course, gold has gone up so much, but it wouldn't be a comparison on the chart, but like if you denominate one asset in the other asset, it's essentially almost a flat. Yeah. Anyway.
Mm-hmm.
Like Bitcoin Gold is one I've had for a while. It's been so peaked in 24. Bitcoin SPY is
that bearish RSI divergence is scary as hell. Like that.
Just yeah. That's been on Bitcoin.
Three top.
Yeah. But again, it kind of makes sense to sort of like diminishing returns across cycles, unless this time is different and we have a super cycle. But I'd be surprised.
Playing the classics, I like it. Super cycle. Where is Suzu when you need him?
Well, I mean, there's the next Suzu sort of around probably somewhere, and I think there's going to be a couple of probably DATs that will take his place for the foreseeable future. But I think one thing I do want to highlight was my terrible call, I think a few weeks ago, which was Bitcoin miners. If you type Marathon, like Mara, so that's actually still, I think, an interesting one for a different sort of, for a number of reasons. But I still actually think that's there you go. Look at that. And I think this is the monthly. So yeah, I think that's and so earnings were very, very quite positive. But I think ultimately energy costs appear to be going up a little bit. But I think still, so this market is going to get a lot more competitive, and as it does, I think there's going to be far and few winners. So we'll sort of see. But I still think that could be an attractive entry at 14, provided Bitcoin goes on another tear. Because that changes the economics. Because if you think about it, that sort of levered, I mean, it's not on a MicroStrategy level, but it's sort of a more responsible leveraged Bitcoin bet with some actual underlying, some actual economics involved, other than their ability to service debt. And I think that's something that I don't know could also be quite interesting. And I think there's Circle, which we should also take a look at hovering at 100 now, which has disappointed, I think, quite a bit. There's the whole like rate impact, obviously, because the Treasury won't be performing as well. But I think at this point, it's probably a little bit like if you move to a daily or something, you'll probably see it looks like that's overextended. And I think that people still sort of underestimate how, again, especially going back to that like segregated liquidity argument, how much of a service Circle actually does provide in this digital economy, and how pivotal it is, and how it obviously also works on its own blockchain, and how that can sort of change a lot of things.
On that note as well, because I know Tether is trying to launch like $500 billion, like 500 billion. I'm not sure how they're going to sort of justify that valuation with Circle sort of continuing to fall, or maybe they'll launch at a different valuation. But kind of interesting to see. But at the same time, I feel like stable coins is the sort of the mega focus of, or one of the predominant focuses this cycle, and especially when it comes to sort of non-crypto people. It's like
there's no moat. There's no moat, I think. I think for me that's like always like I think we've talked about it previously on the call, but it's like, yeah, I mean, of course you can talk about
there is
infrastructure.
network effects with stable coins though, because like I don't want to receive some like fucking 20 different exotic stable coins and have to worry about that. Like as a company, I'd be like, I just want to receive like maybe 2 or 3 stable coins and that's it. I don't want to be messing about with due diligence and all these other random ones.
Agreed on until that changes. And I don't know. I think the switching costs are relatively low, but I agree. I think the network effect, is totally a thing. And so USDT, USDC is still kind of like the most liquid markets. If you want to trade, anything that's denominated in it, the USDC is the legit one. The USDT is like the more crypto one, and so on.
And safest and most stress tested. Like, obviously, there's not super transparent,
but it doesn't take much for, let's say, a daily yield-bearing stable coin, that can be held in a decentralized way, to be the preferred, stable coin for like a lot of small, let's say, transactor, like not big traders and so on, but like literally people in developing countries that are using it and earning a yield de facto, with those.
Retail, 100%, but I think for widespread stable coin adoption, though, people are mostly going to be spending their stable coins for like goods and services. And so any sort of provider of those services is going to want some sort of standardization. And like people inevitably, any of their savings, they're probably going to try and gamble with, but then they also run into the risk of like all the depegs we saw from the rehypothecation. And
I'm wondering if you couldn't make a case that Circle is Nokia.
No, what?
In the phone. It's like a Nokia brand.
Yeah.
Nokia. As in, it's like, it is the biggest one, the most network. And like when we all had our 3210 and 3310, nobody expected anything else to happen. And of course it takes time, right? But my point is, if I'm bullish on Circle for the next 5 years, a lot of things can happen in the next 5 years that changes things basically.
But unless like someone else comes out with like an iPhone where like Nokia died because they didn't enter smartphones. It's like a stable coin's not going to magically morph into something different. It's like, or at least not in any meaningful way, I feel. And they're kind of already exploring like yield producing stables. And so I don't know, but I'd probably be a buyer fairly soon.
I think we need a prediction market beyond the stock price, to be like, how valuable is Circle going to be in the next X amount of years? Quick side note I wanted to talk when we were talking about Polymarket is there's a bet on whether Nancy Pelosi is going to be sued or tried for insider trading, and the probability is 0. Like everybody thinks she's gonna get away with it. So anyway.
Maybe that's a good bet, because like Trump's called it the Pelosi Act. It's like the politics against insider trading. So,
but you can't retroactively get her, I guess. Guys, just so you know, we can still talk for a bit, but we're going over an hour and a half of conversation. That's, I think, a bit long. I don't think anybody's listening to us, but even then, that's still a long time. So.
Yeah, we can wrap it up. Any final shows from your side, Justin? I think you gave us one.
For me, I've talked about it. So my opinions don't change that much, on a weekly basis. But I bought some Chainlink and I bought some HBAR, so Hedera.
Okay.
I am holding some Near that you just picked on. I've got some Aster. I've got some Hyper. Otherwise, my main is still Bitcoin. Nice. Yeah, I did, because I think there was a pullback basically. And I actually, tell me maybe if I'm crazy or not, because I didn't have stables, but I swapped Solana for Hyper, basically.
Oh, okay.
Yeah. And not a big thing, right? But just like a little ticket, into Hype so that I'm exposed, let's say. And I did the same for Aster. And so far it's playing out relatively well. So I'm happy basically. That's it.
Nice.
I think Aster, when I look at this chart, it looks juicy.
Yeah, it feels. I don't want to like talk too soon because I felt over here it felt juicy because it was like, oh, a nice rounded bottom, like this is exactly the kind of setup I like to see. And then it's like, oh my god, how much further can you keep going down? But
the Aster looks a bit different. The Aster looks a bit different. There's more concentration, right? You can see that bottom that has the volatility, the volume, right? And then the slow ramp up. So I mean, you never know, of course, but I think the chart looks a bit different.
Yeah, let's go. I hope it goes up.
Let's see.
Yeah.
All right, guys.
I think or at least I'll stop the stream and then we can see
Nice.
what we want to do. Wait,
Pleasure.
I don't even end the stream, but anyway, let's close it here. We can chat on WhatsApp, I guess.
Awesome.
All right.
Okay.
Cheers, guys.
Go
Bye,
on.
guys.
Take care.
Pleasure.
Bye. Bye.
Bye-bye.